Good Monday morning, everybody. We're going to let everyone join in here over the next few seconds. But for this first Monday in May, who would have thought that we would still be hunkered down when we started this in March? But we are fortunate to have this year's CCIAOR affiliate of the year, Charlotte Green, come join us to answer a lot of questions I know are on a lot of the minds of the people I talk to every day about the mortgage market impact and all of the things we're seeing relating to mortgages these days. I know Ryan's got some updates. It's the end of one month and the start of the next, so we have data that we start to see that will eventually be formally released in the next few days or a week or so. But it's a good way to start a brand new month. It is somewhat beautiful outside right now, so we'll try to get through this quickly. But we're super excited to have Charlotte Green with us today and to kick off with Ryan's updates. So I will turn it over to you guys with now close to 150 people in the room.
All right, and I'm just trying to share my screen with you guys. If Marissa, if you can let us share screens, disabled right now. Perfect. We'll get going right here. So, wanted to talk a little bit about what's going on, what's the latest info, and if you hear anything in the background, apologies. So we have our continuing education webinars every Wednesday at 1 p.m. through the end of June. This Wednesday, understanding agency and disclosures are always our free on-demand CEs from the Massachusetts Association of Realtors as well, if you don't want to sit through the live webinars. Understanding agency disclosures this Wednesday is part of our core classes for the Cape Cod Real Estate Specialist designation. Hopefully over the weekend you got an email seeing that. We rolled this out in February, but then as March came for the live classes, we ended up having to cancel stuff. So this new Cape Cod Real Estate Specialist designation we've rolled out, this is one of the core classes. So if you want to get a jump on getting that as an agent, this is, like I said, a core class for the agent. We have a broker and an agent track on that, a management and an agent track on the Cape Cod Real Estate Specialist. Tomorrow, this actually was a webinar we had scheduled prior to being at home. So this is great. Daryl Davis, he was supposed to be joining us for the Cape Cod Real Estate Conference in April 2nd at the Quasit that we had to cancel, but he is coming next year to our Cape Cod Real Estate Conference, April 1st at the Quasit, so go ahead and mark the dates for that. But the secret to real estate success with Daryl Davis, tomorrow at 10 a.m., sign up for that. Daryl is a preeminent national speaker, and those that have seen him knows his high energy and his great insights to provide to you. This Friday, as every Friday at 10:30, we have a professional development webinar. We have creative marketing tips and tricks with national speaker Valerie Garcia, who you may have tuned in 2 weeks ago for her presentation on things to do while staying at home. But here's her creative marketing tips and tricks for this Friday. So make sure you go to our website calendar, sign up for that. Virtual MLS tours again this week. As always, another packed schedule, Tuesday, Wednesdays, and Thursdays at 9 a.m. You can find the links in the MLS tour section inside the MLS. Tomorrow is Town of Barnstable for the Mid-Cape. Wednesday's Upper Cape, and Thursday is Outer Cape this time. So take a look at those, put your properties on tour, that sort of thing. Also this year, the NAR legislative meetings that are usually in May in Washington, D.C. are virtual this year. The virtual conference sessions are May 12th through the 14th, but all throughout this week and next, there's other sessions such as forums or committee forums or committee meetings that may be streamed that you can check out to see all the business that the National Association of Realtors does at their twice yearly meetings. So take a look and register that. The streaming sessions you just have to register for, but it's all free. Legislative.realtor is the website to go to check on all that. Wanted to talk a little about the smoke inspection deferral. So, it seems now like an eternity ago, but a month and a half ago, we were all panicking on the smoke inspection issues. Fire department's not doing smoke and carbon monoxide inspections at the time of sale. The governor signed an order that waived that requirement until after the state of emergency ends. However, it's negotiable between the buyer and seller and who is responsible financially. You can do a holdback or credit if the lender allows. Charlotte may be able to talk a little bit more about what they're doing at the Coop on that. But it does not shift automatically all the burden to the buyer. It is all negotiable. Just had a lot of questions along that. Also, you need to send information to the fire department. Either the realtor, the buyer's agent, or the closing attorney. Someone needs to send the information to the fire department so they can line up inspections, know what properties to inspect. We're hearing from fire departments that they're not getting any of the addendums or anything like that. So they can have a list of inspections on Zoom. But later today, we'll be posting on our website what the fire departments in the towns on the Cape want you to do, whether it's email or call with all the information. But you need to have those inspections done with when they resume. So they want to try to get a feel and a list of the properties they have. Also, parties may also agree to use a third-party company for an unofficial inspection to determine what upgrades are needed, if any. I mean, you guys know a lot of what the upgrades are going to be needed anyways, because you kind of know what you're looking for, because as a listing agent, you're probably going through and prepping that property, and you should go ahead and have that seller prep that property anyways, just in light of this, to go ahead and get through that. So I just wanted to bring that up because we're getting a lot of questions about what that actually means, and just the high level is that it does not automatically shift the burden to the buyer. All right, the Massachusetts COVID-19 housing bill passed April 20th. We had Johnny Schreiber from the Massachusetts Association of Realtors on a couple weeks ago talking about what might be included in the bill. Just wanted to update you since it was passed, what was included. Landlords are prohibited from imposing late fees or reporting to credit agencies for non-payment of rent. Terminating tenancies or sending notices include notices to quit or vacate property until unless tenant is engaged in criminal activity or violation of their lease terms that create health and safety risks. So you're not able to do a lot of things to get people out at this point if you're managing property for owners. And that goes for till 120 days from April 20th or 45 days after state of emergency ends, whichever is sooner. And the governor can extend that in increments of 90 days if he wants to under the bill. It also limited landlords' protections. It has very limited landlord protections in the bill. Mortgage forbearance covered because there's a whole other mortgage forbearance foreclosure side of things as well. The mortgage forbearance covered by provides some relief. It is limited to owner-occupied properties with 4 units or less. And also the bill permits landlords who have received rent in advance to spend it on expenses such as mortgage payments. We have a whole post up on our website in our news section you can find about what the housing bill does on the foreclosure and on the rents, on the landlord tenant side as well. So check that out for that latest news. I want to talk a little bit about pandemic unemployment assistance. In the last week or so, I've gotten some stories from you guys, and I hope you guys reach out to me. It's all confidential, but I'm interested to hear what's going on with it so I can relay it out to the rest of the membership. So talked to several members who have started receiving their money. Last Monday, they started getting, I think, payments. It seems around the state, and this was evident from Greg and I's call with the state association last Monday as well. Everyone right now is getting the same amount, which is the $600 from the federal government as part of PUA that goes through the end of June, and $234 or so around from the state for $834 a week. That would be what the state apparently is giving out, and then from what we understand from mass unemployment, they're going to go back and then recalculate and put more in retroactively to when you started filing for it. The reason is they wanted to go ahead and get money in everyone's hands right now at the minimum level, and then they'll go back and look at your Schedule C and that other information you put in, and potentially make it retroactive with some pay. I did talk to some people who had, and this was a big question, what they did when they got the thing to filling out each week. They put 0 in for the weeks they weren't earning any money. They didn't get paid a commission. Then they put their commission in for a week that they got commission. And it seemed to be that they would just get the 830 something for the week they put 0 in. If they had a week of commission, they put their commission in, and then they put 0 in for the next week if they didn't have any commission, and they'd get that unemployment assistance again. So it seems like the commission's not affecting, like if you get paid one week, it doesn't affect future weeks if you're not making any in the future weeks. So that was interesting feedback I had from some agents. Like I said, give us a call, give me a call or an email with any any feedback you have from accessing this program or PPP. Late last week, I hope those that missed out on the first round of funding put in their applications last week for PPP, because it was refunded last week, replenished last week. And also in the middle of the week, I think the Feds issued that only community banks can kind of access that funding now, and they put a hold on the large big banks. And then I know today the Treasury said about some other guidelines about repayment to try to stop some of those big major corporations that were getting PPP from being able to access that money in the future. So on a lot of that stuff, just wanted to kind of update you on that. Tomorrow, new little cool tool in Cloud CMA. That Cloud CMA comes with your MLS membership, whether it's Cape Cod and Islands MLS or the Martha's Vineyard MLS that we both offer Cloud CMA in. It's Cloud CMA Live. What it is when you do your CMA in Cloud CMA, you can do a live web page of your CMA for your buyer or for your seller. Could be great for some virtual listing presentations. You can add properties. You can look at ones, why you didn't include them, why you didn't, as you see the map of the homes in the area that have sold. And just a live thing. We'll have more information tomorrow when it launches with some tutorial videos and everything else, but wanted to preview that for you to be taking a look at that tomorrow with Cloud CMA Live launching. Wanted to go through a couple stats now. So these are ones that have closed in April. And I don't like talking about month-end data until several days after the close of the end of the month. Usually our stats that are at our market data one sheets, PDF spreadsheets on each town and the whole county and all that come out, get updated about the 10th of the month. That's to give everyone time to close out properties that they may have been late on closing out and getting that data kind of finalized. So this is still very preliminary data I want to talk about. So through April 30th in 2020, there were 1,300 residential properties, single family condos, that have transacted through the MLS that have sold. We have 5 more properties that have closed to the registry, but the agents have not marked them closed yet. So essentially we could have 1,305 properties that closed through April 30th in 2020. Just to compare that to last year, 1,301. So essentially the same amount of closings through the first 4 months of this year as we had last year. And then wanted to kind of highlight this. We had 308 single family and condo properties had an accepted offer in April. So there's still business being done. However, that's obviously way down from last April where we had 700. So when we say accepted offer, it's contingent no showings, contingent showings allowed, pendings. Those were people that had accepted offers, and they could have been sold by the end of April. But 308 switched that status in April, which makes it that many had an accepted offer. And you see the breakdown on the right of the number of listings in each kind of price category of where the market's going, and what had an accepted offer for that month. Preliminary sold data for April, and like I said, once again, preliminary. New listings down almost 60%, pendings down 45% as we expected, right? Like, you know, April's where we saw the full impact of this issue. And so no surprises here. And I think we'll see that coming as we get to May, we get to June. Those solds are going to continue to be a bigger decline because you see the pendings have the bigger decline. So just wanted to show that out, and we'll provide all this back out to you guys at the end. That's the vast of what I have. Greg, do we have questions about anything I talked about in here before we bring Charlotte Green in from the Cooperative Bank Cape Cod to talk a little about the mortgage industry?
Yeah, look, there are a lot of individual questions about PPP and PUA, and I think the truth is a lot of us structure our businesses in so many different ways that you do need to check in with an accountant or your bank. You know, I think we're seeing some people say, well, I'm working, I'm doing virtual showings, or I'm working on a purchase and sale, so should I put that I'm working? Should I put that I'm not working? Our understanding at this moment is that for 1099 contractors, you are working in weeks that you receive payment, and you are not working, and I'm using my air quotes, you are not working in weeks that you don't receive payment.
Yeah, there's a little box for I'm an independent contractor from what I've been told by people that have gone through the process.
But I know the questions I keep on getting are, well, I'm doing work, so should I say that I'm working or I'm not working? I think for the definitions, and we'll get clarification again through MAR, but for our purposes, you're defined as having worked in a week in which you receive pay. So if you're not receiving pay, you're not working, although we all know that you're probably working harder than you've ever worked before. So that's just one of the quirks of filling out the documentation. There are also another a bunch of questions that have to do with specifics. So again, I will defer those to your financial professionals. If they can't come up with an answer, please come back to us with what they can't get answered, and we'll get Johnny and the team to work on those. Again, send me those, and we'll talk about them on the MAR call that we have at 3 o'clock. But Ryan, there was a question about the CCRES. If someone goes to the legislative meeting virtually, does that count for their credits?
No, because we weren't counting that as a credit even in person. So, and it's hard for us to track that. So if you're talking about the NAR legislative meetings, that did not count as an elective, but there are other legislative electives that we'll have available through, especially online in the next couple months.
And then there have been a few questions about short-term rentals post May 18th. I mean, I think our understanding right now is that as long as the stay-at-home order is in place, the short-term rental prohibitions will remain in place. We've heard, and I've heard, I don't know if you've heard anything different, we've heard no guidance on short-term rentals other than what's been published. So I know there are a lot of rumors and conjecture and thoughts out there, but there is no guidance.
Yeah, so the governor's created a reopening task force, right, that he announced last week that will announce that supposed to announce their plan by May 18th. So that's when you would hear that. There is and we'll be putting this out to the membership today. There is a form you can go online form to send a message to the task force. So if you have certain things about how things should reopen, or regulations that should be in place to help things reopen, you can submit that information there and your feedback there. And that would be the best place to get the message to the reopening task force about the businesses that are closed. I mean, you guys talk to a lot of business owners. You have you work with tenants that are businesses and everything else. You guys probably have a lot of insight beyond just short-term rentals to provide that reopening task force. So please, on how businesses could reopen. So please submit that feedback there. I think that's the really important stuff on how all that's going to be handled. I am working with folks around Barnstable County and Nantucket and Martha's Vineyard regionally on some issues around reopening and working on trying that potentially if Department of Public Health or boards of health put out any regulations around cleaning, that we're involved in those discussions. I'd like to see it statewide so that it's not every board's health creating their own as we do eventually reopen, whenever that is, on the short-term rental side. So those are some of the conversations that I'm having on a daily basis.
And, there was a question about what has been published so far. So you can always go to marcovid19.com and you can see the latest updates as they relate to all things Massachusetts real estate. So marcovid19.com.
Yeah, and there we also we launched last week a webpage devoted directly to vacation rentals in the pandemic. That's on that on the CCIR's COVID page. Mm-hmm. So if you go to CCIR's COVID page, the bar at the top of the page takes you right there to that page. And it has vacation rentals in pandemic. It also has information and resources available for clients you may have, past clients you may have, who are struggling to pay their rent right now. And so it has some resources that directing you to how to some of the resources, some of the housing assistance counselors, like the Housing Assistance Corporation, things like that you can get out there.
And Ryan, you can post that link out there on that page.
Yeah, like I said, on the follow-up email later today with this presentation, we'll have a whole thing about contacting the reopening task force.
Perfect.
I'd like to bring in now Charlotte Green. She's the assistant residential sales manager at the Cooperative Bank of Cape Cod, and her and I are going to talk a little bit about mortgages and what's happening in the mortgage market. Hello, Charlotte. How are you?
Hey, Ryan. I'm great. Thanks for having me here today.
Thanks for coming on. You guys have been, I'm sure, extremely busy and taking a lot of questions, and things are changing kind of rapidly in your world. Can you give us a high-level overview of what you're seeing out there right now?
Yeah, I'm seeing day-to-day changes and updates that we're having to pivot and adjust to. I think the biggest things we've been keeping an eye on are requirements for appraisals, how we can be more lenient with those, how we can enact new guidance to become more lenient with those things, and keeping a pulse on updates in the mortgage process, heightened requirements for acceptable age of documents and employment verification for people prior to closing. That's probably the biggest item that we're seeing these days is making sure people are still employed prior to closing, and how are we verifying that, especially within our self-employed community.
So I think, back in, mid-March, you and I were talking almost daily with updates as the Feds was lowering interest rates to essentially nothing and talking about potentially negative interest rates. But we haven't seen interest rates fall as much as people expected them to. Can you talk about, why that is and what's going on out there? I mean, obviously, you probably got a flood of refinance applications at that time, too.
Oh, we got a ton of refinance applications. They're still certainly coming in hot. I will say what mortgage rates have done during COVID are unprecedented in the mortgage industry since they've been tracking rates. They really, the market reacted very quickly to the unexpected Fed rate drop, the between meeting drop. The market really bottomed out there probably early March, and then it improved. So rates went down really fast, and then they went back up really fast, and then they were kind of all over the place for a few weeks. The concern was, did lenders react too quickly in dropping those interest rates? And as rates continue to fall on the Fed side and the economy worsens, rates have nowhere lower to go. And at a certain point, investors don't want to make loans with very low returns on a long-term investment.
And the mortgage rates aren't exactly directly tied to Fed interest rates like you might see credit cards and car loans and things like that. I mean, you got the issue of the oil price war going on between Russia and Saudi Arabia, and then just the vast reduction in demand for oil has dropped that, which actually affects mortgage interest rates. And there's a whole global economic things that affect mortgage interest rates more than just the Fed rate.
Yeah, so the Fed rate that's definitely a common misconception that dictates interest rates. The best indicator you could look at would be the LIBOR 10-year bond, and interest rates are loosely tied to that. So they're not directly correlated by any means. They are somewhat independent of other markets while also having sensitivity to what's going on in those markets.
And then we're hearing a lot about massively increasing standards in credit scores and down payment requirements. I think we saw like Chase that said, 20% down for portfolio loans, 720 credit score. You know, we've heard a lot of rumors, and I'm going to put this to bed, that FHA increased their credit score requirement to 680. They did not. I just wanted to clarify what happened. Is investors who were heavy on buying the FHA mortgages were looking at their, most of the time, and I guess you can explain it, they call them overlays, but they look at what they have in their hands and they're saying, oh my gosh, I got a ton of FHA mortgages. These people may not pay. I gotta get, if I'm gonna take another FHA mortgage, I gotta make sure it's better.
Yeah, so FHA loans are typically a higher risk customer profile. So looking at what's likely to default first, the existing FHA loans on a lender's books are going to default, just as a rule of thumb, before something with a 750 credit score and 20% down payment customer profile. So in order to circumvent an onslaught of new business there, and in a very volatile time where these more fringe customers are more likely going to be affected by the ramifications of COVID, investors have said, we do not want these 580 customers on our books. So a lot of investors have implemented what are called overlays. So you have the existing set of rules for the FHA loan, and because they're the ones funding these loans, they can make their own rules. So we've seen people go up to 680. I've heard of investors going up to an 820 minimum credit score, and where the
essentially because they just don't want any more loans, rather than stop offering them, they just raise the requirement.
Yeah, so they've raised the requirements and they're raising the interest rates in order to make them less appealing and less obtainable. And they're therefore kind of covering their butts a little bit with this.
So what can someone credit score wise and you know, with all the other variables, what are the minimums that are being looked at now? Because obviously there's really no market in that 580 to 620 or so anymore, is there?
I wouldn't say so, Ryan. And you mentioned overlays, so that's a great point. Conventional financing will still go down to a 620 credit score. It's just an overlay of, will the investor tolerate that? We at the Coop want financing to be accessible to everyone who qualifies. We haven't put any overlays in place on our conventional loans, so we can do 620 credit scores. We put a person under contract for 3% down on a first-time buyer loan, 30 years at low threes. So the overlays are what's important. Chase, for example, 20% down across the board on any purchase loan. That's
so now, because these overlays and everyone's kind of doing different things, it's more important than ever to shop around now.
I'd say it's very important to shop and to make sure the terms you're getting are competitive. And if something sounds funny to you as an agent for what your customer's obtaining for financing, have them take a second look, because that sniff test is a really great indicator of, is this normal? Is this right? Are they getting what's best for them?
Okay. And have you seen any changes on the Fannie and Freddie stuff yet, or?
We haven't seen changes to Fannie and Freddie in terms of qualifying parameters. What we're seeing changes in are the allowable age of documents. So for example, where we might have accepted a bank statement that was valid up to 120 days out from your closing, we're now going to want it closer to 30 or 60 days out from your closing, especially to make sure that those funds you're using for the purchase or for reserves to strengthen your profile are still in the bank and haven't been affected by the market.
So employment verification is becoming a big thing with furloughed employees or strategically laid off employees. What are you seeing out there, and how's it all being handled?
So we're verifying employment very close to closing. It had previously been within 10 days of closing. Now it's typically within 48 hours of closing. So we might actually do 2 of these verifications. So if you look at an employee who is furloughed but still receiving pay, that would be something that we could work with, or we could take their reduced income as well. We've done that in a couple instances where, Jane Smith was furloughed. She got cut down to a 30-hour work week that they're paying her versus a 40-hour work week. So we're using that most recent and most accurate income at the time of closing. So if between you're being cleared to close for your loan and your closing date, you've lost your job. When we verify your employment and uncover that, it's going to be problematic for your financing. So that's a really big thing. And then for self-employed customers as well, we are verifying employment within 60 days of closings. So the way that works is we have to verify receipt of business funds much closer to closing, where we previously didn't really have these requirements. We just had to verify your business was still operating. Now we verify it's still operating and it's still receiving income.
Or do you know if, and this might be a random question, but if the loans self-employed are getting through PPP, is that being counted against their debt to income and things like that, or impacting their credit scores for loans that they may be looking for a house on, even though it's a business loan?
It's not necessarily affecting the credit score in terms of the scoring algorithms for the multiple inquiries, but it does show up on your credit report as an inquiry, depending on how your lender for that PPP structures the inquiry. It wouldn't count against your debt to income profile because it's a business loan, theoretically forgivable, but investors are pulling credit scores to verify that you are credit worthy before making this loan. And if you are receiving a PPP loan, it could be problematic in terms of what is the current viability of your business. So we do run into some road bumps with that.
And, we're in, as I talked about earlier, we're in this unique and unprecedented stage of independent contractors and self-employed being able to get unemployment income. So, like our members or other self-employed getting unemployment income, but also could have that proven 2 years of income, right? How are you treating unemployment income, especially for these self-employed? Like, is it going to impact that they're claiming unemployment, even though they may be still some weeks, like I said, making commission and other weeks not, like they normally would? How's that all impacting those people getting loans for houses?
That's a great question, Ryan. We've run into this a few times already, and the receipt of unemployment would be problematic for your financing. So if your customer has now, your buyer is now receiving unemployment where they were receiving a regular paycheck and they don't have a steady history of doing that, it would be an indication that your business is not viable. It's not going to continue to produce income. And we therefore cannot use the unemployment income to qualify you because that's not going to go on in perpetuity either. That being said, for a customer with a 2-year history of, or plus history of being self-employed and also receiving unemployment income during the off season, that would be something where it's a standard business pattern and habit, and it makes sense from an underwriting standpoint of continuity. This is a pattern they've had. It's a pattern that's going to continue. We know they're going to get back to work. But if we,
so as with all these, work with your lending officer, because there are so many unique situations that will pop up.
There's so many unique situations that are popping up, and a lot of it's going to depend on what type of financing you're using. So if we're doing something that's underwritten to Fannie Mae guidelines versus something that's sitting in our portfolio, we're being told a lot more what we have to do versus us being able to bend a little bit more when we're lending within the portfolio.
All right, let's talk about your favorite topic right now, appraisals.
Oh,
what are you seeing out there with all your appraisals you're running, and what leeway, and I'm sure it's depending on what kind of loan the person's doing, but what leeway are you giving appraisers? And then are the appraisers exercising that leeway?
Yeah, that's a whole nother kind of piece of the puzzle is the appraiser's discretion, which is one of those things I hate, as well as underwriter discretion. But appraisals, there's been a lot of guidance that's come out about them in terms of streamlining requirements. So in certain instances, our automated underwriting systems will automatically just push out a waiver of an appraisal. They'll say, we accept the value that you've input in this loan application. We don't need an appraisal whatsoever.
That is only on Fannie loans, or can that be portfolio too, or anything else?
That is going to get really into some mortgage nitty gritty. It can go Fannie loans or Freddie loans. For the Coop, we will honor those waivers in our portfolio loans as well. We want to accommodate people. If we can get an appraisal waiver all day, we want to use the appraisal waiver, because our automated underwriting system, by issuing that waiver, they're guaranteeing the value. So
Okay.
it defrays our risk. Another thing, we're seeing a lot of our streamline requirements. So where it's acceptable to do an exterior only appraisal. And that's a lot of the times on our refinances. And we are running into issues with those, it would seem, with those values coming in a little bit lower than we would expect them to be, if the appraiser had been able to get inside the house. Because you can imagine there's a lot going on within the house that you couldn't see from the outside. So upgrades and updates since time of purchase. So if you agents out there have buyers, or your sellers have buyers who want to do an exterior only appraisal, I would say to try to get the appraiser inside the house if everyone's comfortable doing so, in order to make sure you're maximizing that value.
Okay. Yeah, I was talking to an appraiser last week trying to figure out what's going on, and he was saying that most of the time they're letting him in because he calls the homeowner and says, do you want to sell your house? Let me, but but is it hard getting appraisers now? Because there are some appraisers I've heard that have just stopped doing any work right now.
Yeah, we went through our entire list of appraisers and had to determine who was comfortable doing what. So we did have a few companies who said, we're not comfortable going inside a house at all at this point in time. So we've had to assign our appraisals accordingly to make sure that we're doing what's best for the customers.
Okay. All right. What else have I left out that you and I discussed last week we were going to talk about? I don't want to leave anything out, but and please, if you have any questions that we have not covered, please put them in the question box. So we do have a question coming in. A buyer who's presently earning at pre-COVID levels, but collected UI for a period of time, is that bad for their loan?
If they're back to work now, it shouldn't be bad for their loan. If they're still on that unemployment, they would need to speak with their lender immediately to make sure that it's not going to be problematic, especially if they're trying to buy a house. And they should get that squared away before their financing commitment date.
All right. Also, we had a question. Can you talk a little more about what overlays are? Some people wanted, because I don't think we ever really in the real estate world hear much about overlays. It's something you guys tend to care more about, and there's not really there, but can you talk a little bit about what an overlay is?
Yeah, of course. So to put it in a really simplistic matter, think about it as if, we all have a game of Monopoly that we're playing. Everybody, and we'll call Fannie Mae and Freddie Mac Monopoly. Everyone.
Good use of alliteration for them.
Thank you. You all get the same box and the same set of rules that you have to operate within. Well, at my house, I might not like that you're charging people so much for rent on Broadway. So I'm going to put in a rule at my house that you can only collect X amount. So an overlay is more or less a rule on top of a rule. And so the golden rule is the guy with the money gets to make the rules. So that's where you see Chase putting in place an overlay. If you want to play Monopoly at my house, you've got to put 20% down and you've got to have a 700 credit score.
Greg, I love this comparison. Think of it as, for our members, think of it as MLS rules on top of the real estate license law, that we have certain rules to participate in the MLS that go on top of the real estate license law that everyone has to play by. So, Greg, I know you definitely love that comparison right there.
Oh, yeah. I can't even speak to how much I love that comparison. Thank you for that, Ryan.
Also, yes, someone's mentioned about probate court. Yes, with courts not really open, probate sales, estate sales are really having trouble happening.
Oh yeah, we've seen things dragging, and I mean, probate, I hear that word and I cringe because I know it means an extra month to close a loan if I'm lucky. So probate, things are not moving quickly through probate at this point in time.
Yeah. So what else have we not mentioned? Please put your questions in for Charlotte if you have them on the ones we have not hit yet on what's going on in the mortgage industry. I think So is mass housing and all that, are they still up and running and doing all that? What's the latest of that? As I heard certain things about that early on.
As far as I've heard, they're still up and running and funding their loans. So a lot of this has to do with the funding sources and uncertainty. We've got a lot of concern with the USDA. Is the USDA going to continue to fund these loans? And that type of financing has also fallen in line with the FHA loans, where there are overlays being put on those loans and the interest rates are being increased to keep people from using them because they're a higher risk loan. I don't think the mass housing loan's very high risk in terms of, like, if you're going to compare it to an FHA loan, and they've got a lot of funding that I think they're looking to push out still.
One more question. You know, we have a resource up online about how to help people and what people should be doing if they're having trouble paying their mortgage. But they've had past clients that have reached out to the realtor saying, I don't know what I'm going to be able to do. I can't pay my mortgage. I don't have a job anymore, all this. What should people be doing in that instance? What's your advice?
That's a great question. I would say, Ryan, those agents want to have their customers reach out to their loan servicers and their loan officers sooner than later to let them know what's going on and that they're having trouble making payments. The payment forbearance and relief that Fannie put out really isn't as generous as we in the mortgage industry hoped it would be. The Coop has reacted with their own set of forbearance that we're able to do for our portfolio loans, but like with Fannie, we're playing on their monopoly board, so we have to follow their rules. Being in communication with the person you have to make your payment to about the fact that you're having issues with it sooner than later is going to solve a world of hurt for people. And I would say, like, this is one of the huge times I'm so glad to be with a local bank, because we are looking to help people. We have over 170 mortgage forbearance applications out to people to try to help them modify and make their payments more affordable. So this is the huge time where I'm saying local is so big. I mean, you're not going to see Bank of America out there trying to be flexible.
So we have a question about people moving with job offers. How recent does the job offer have to be? Because I'm sure maybe some of that's being delayed right now and things like that. Have you run into some of that? Particularly here with the healthcare workers coming in or other ones, you know?
Yeah, that's a really interesting question. I haven't seen that come across my desk specifically, but in terms of the age of that job offer, we would really just want to verify with the new employer, future employer, what the projected start date is going to be. So typically we want it within 60 days of closing. But if that person is starting a new job, maybe they haven't left their other job at that point in time, but really it's going to come down to the verification of employment side of things. So you've provided a letter early on regarding an accepted offer. Is that offer still good? What's the start date?
All right, and how about veteran loans, VA loans? Have you seen them affected at all or anything?
I've seen the interest rates affected on the VA loans. So that's a big one where I would definitely recommend people shop on those mortgages to make sure the interest rates they're getting are under 4% at the very least. And if it's anything.
So they're not always the best right now compared to what they usually are.
Yeah, usually VA loans are lower than a conforming 30-year fixed rate mortgage. They'll probably be in line, maybe a little bit higher, but we have investors, and I've heard of people who, are seeing those loans at 6-7% right now.
Wow.
And if that came across my desk, I would tell someone to wait, because I don't think it would be in their best interest to finance at this point in time at such a high interest rate, unless they had a really dire need. Ryan, one thing you and I did talk about was the remote notary.
Yes. Oh, yes. Do not get your hopes up on the remote notary bill. Sorry.
Correct. Yeah. It's like it's really much more trouble than it's going to be worth. And really, it would make same-day closings really difficult, because I, as a customer, would have to sign video I would have to get my paperwork to my attorney. They would then have to notarize them and then have a secondary video conference with me and then go bring them down to the registry. So that at that point, you might as well just be doing the sign and notarize through the window at the office or through your car and get it done quickly rather than dealing with the headaches of the remote notary.
Yeah, I mean, you have to be physically located in Massachusetts as well. And the bill of Massachusetts passed probably is not going to help much on that end. I think you said, or someone else told me, they'd probably think it would help much more on the probate side than on the sales side.
Yeah, I was thinking from an estate planning side of things.
Estate planning, sorry, yeah.
Side of things for things that need to be signed. If you have someone who can't, doesn't want someone in their house, or if you think about someone who's in a hospital, it will work for them. But for a real estate transaction and a closing, we'll accommodate them if it's in the customer's best interest and if it's what they need. But for the most part, it's going to be more trouble than it's worth.
Great question we have on student loans right now. Federal student loans were automatically put in forbearance.
Mm-hmm.
How's that being treated? What's going on when you look at debt to income, or when you look at, all of that for your monthly payments? How are you treating student loans right now, especially when they had no, choice on what they're doing?
Yeah, that would be really documentation heavy. So we'd get any paperwork the customer has received from the student loan company. And we'd be looking at what's reflected on the credit report. So sometimes the credit agencies can lag in what's reporting, and that could run into some road bumps there. But for the most part, we know that, yes, it's in deferment now, or forbearance, but at some point in the near future, it is going to be taken into consideration. So
yeah, I mean, I think I've heard the best tips is if you can make the payment, keep making it.
Yeah, and same with everything, same with the mortgage, any sort of bills you have. If you can make the payment, keep making it, because you're not getting free money. They're charging the interest somewhere on there, tacking it on at the end, or tacking it on.
Or you're going to have to pay for it sometime, right? You're going to have to pay the principal down at some point.
Yeah.
All right. I think that is all the questions we have. Greg, is there anything that we didn't cover that you thought was vital in the lending that you're seeing out there in the real estate market?
Yeah, so I guess the question I would ask Charlotte, and I know the answer is probably, well, just call me and I'll run you through it, but I'm on calls with a lot of agents every day, and mortgage rumors go like wildfire, and NAR has put out their NAR COVID-19 page, NAR has theirs, and CCIR has ours. Is there any resource like that for the mortgage world that we can quickly fact check? When there were those overlays that were added on, all of a sudden I got pinged in 17 different sources like, oh, well, Fannie did this and FHA just did that. Is there a website or a resource that you could direct us to go to so that we don't flood you with calls like that every hour when a rumor starts going around?
Yeah, the Fannie Mae selling guide is searchable online, and they have an entire section dedicated to COVID related updates. So that's going to be kind of your holy grail of who's making the big rules. And then individual investors and lenders are going to have overlays. So signing up for those, I mean, you probably inundate yourself trying to keep up with what every individual investor was doing. I think the local banks are following, for the most part, mandates from the government. So the Fannie Mae Seller's Guide, if you just Google search Fannie Mae Seller's Guide COVID, you should pop up a link right to their page that has, I think it's about 11 pages right now of general resources and links to longer updates.
And Greg, this is just a high level rule of thumb right now, just from the politics side of this stuff. The way I would go is if it's making an FHA, Fannie or Freddie loan harder to get, more than likely it's the investor with an overlay that's doing it rather than the government itself, because it's not going to be very politically popular for the government themselves to make rules to make loans harder to access right now. And they're very in tune to what's politically popular when they're making those rules a lot.
Sure. And then I guess, Ryan, the only other thing that I'm going to do my duty that I was assigned, can you explain to everybody Charlotte's role with all of our calls that we have right now, and
Yeah, so the Cooperative Bank Cape Cod's come on as our title sponsor of the Zoomed In on Real Estate. So she'll be checking in with us regularly with mortgage updates when we need them, and their supports allow these calls to continue. We're planning to do them weekly, Greg, as you know, through the stay-at-home order. When that's over, we're actually going to continue these monthly after that, and the Coops come on to help us present those on a basis. So we'll look to have Charlotte's frequent updates on these with what's going on with the mortgage industry. So thank you. And Charlotte, I'll give you your plug. How many loan officers do you have across the Cape, and where can they find you, and how all of them? And don't call all you, call your trusted Coop lending officer, right?
Yeah, call your local Coop lending officer. Everyone is staying at home. We're all working remotely. We've got our entire mortgage department deployed with laptops, so we're ready to continue closing your loans. Just visit us online, mycapecodbank.com, and connect with the loan officer closest to you, or who you've talked to in the past and who you like.
So real quick, can you answer, how have y'all streamlined, because we keep talking about agents that have gone to virtual showings, virtual listing presentations. One thing we haven't talked about is what technology have you guys implemented in the last couple of weeks to handle this virtual world? Did you need to? And what's that experience more like now for the buyer?
So for the most part, I think it's been a seamless transition for our buyers. The only folks who would really be affected by this or feel the pain are those who really like to come into the office and sit with someone and go through the paperwork. Just due to our staffing and wanting to keep everyone safe, we have made it so the loan officers are not able to go into the offices to meet with people directly. So we're accommodating those customers by having them drop things off in the branches. And if you need a paper application, we're able to send you an application that you would sign in paper. But for the most part, the majority of our customers are applying online. They're uploading their documents electronically, and we're pushing out all of our paperwork for signatures electronically as well. And we are rolling out electronic closing software. It's in the works as we speak, so it should be going live very soon. But we've been able to really streamline and keep the feel the same for our customers while getting our whole workforce acclimated to working.
And how's that shift happen? I mean, do you have a percentage of how many were kind of paper applications versus online prior to this versus now?
I would probably say we were at like an 80-20 split, electronic versus paper. And when I say electronic versus paper, I mean, that might be someone going online and applying online. It might be you and I having a conversation. I type in the application as we talk, and then I send you the application electronically for e-signature. So a lot of people have embraced the paperless technology over the past few years, even more so now. And we're really trying to have people embrace that to limit the social contact they have to have with the branches and outside parties.
Awesome. All right. Well, thank you guys very much. And we'll have the sign up for next week's Zoomed In on Monday in the follow-up email with this recording, but we probably won't announce who's on till late in the week as we try to provide the latest information on. So just if you find these valuable, just keep signing up so you have it, and then you'll get notice later in the week on what the topic's going to be to the Zoomed In on Real Estate, brought to you by the Cooperative Bank of Cape Cod. So thank you, Charlotte, today for coming on.
Thank you for having me. It's nice to see human faces.
And Greg, any closing words for wisdom from you?
No, just keep on sending us requests. We need to get our information up to MAR. Again, Ryan and I will be on that call at 3 o'clock today. And if you have pressing topics that you think are great for this, if you tell us by a Wednesday or Thursday, we could probably address it on Monday. So it's really important that we get our cues from everybody else on this call. So please contribute in every way you can. And thank you to Charlotte and your whole organization for allowing us to do this and allow us, in honor of Katie Clancy's every week request, to continue this on even after we get let out back into the world again. So thank you so much. And thank you to Ryan and staff for the stats and the information you put together for us this morning. And that will all be out in everybody's email shortly. So dig into it and keep on sending us your questions. Thank you.
Thank you guys very much.